everyone, and happy Financially Lit Tuesday. Back at it again for another episode of Financially Lit Tuesday. Back every Tuesday at 6:30 p.m., bringing you news, tips, and tricks on how to wealth up. So welcome back, you all. For those of you tuning in, go ahead and hit the share button, spread some likes, some love. Go ahead and comment and let me know who's tuned in with us, because I have a huge surprise for y'all today. If you're tuning in from YouTube, go ahead and hit the subscribe button to the SippingWealth YouTube channel and a notification bell so that you don't miss any other Financially Lit Tuesdays, because we're always lit, super lit, and today is no different. So I have with me the amazing Jason Scott is going to be joining me today. Hello, Jason. How you doing?
Hey, Wileen. You know, I forgot that you put me in the intro.
Yeah, so y'all, Jason is a real estate broker and investor out of Jacksonville, Florida. He actually has a location in Springfield, Jacksonville. I'll let Jason take over and give a little more insight into himself, and then we can go ahead and get it popping. Yes.
Yeah, I'm the broker owner for Remax Supreme in Jacksonville, Florida. We're located in the Springfield area that's near downtown. So, you know, we broker real estate. We specialize in residential sales, and we help buyers as well. And on the commercial end, we help tenants find space to run their businesses. Got property management coming soon, so you guys stay tuned for that. And as she stated, I am an investor. Me and some partners, we buy homes. You know, working on the investor and trying to be a full real estate mogul. And I like to teach people how to do that as well. So yeah, that's me in a nutshell.
Cool. And Jason, just so oh, hey, Kathy. Hello. Nice to be able to join us. And then, you know, those of you that are a little more shy, you can go ahead and drop a comment as well, so we can know who's tuned in. But Jason, how do they get in contact with you other than popping up at your Springfield location?
Oh, so you were actually my very first closed deal. This is so crazy how time flies. But I mean, I'm really not that deep in the game. I just hit the ground running. I'm only 2.5 years in. But yeah, you were my first deal. I remember looking around. You remember getting catfished at a couple places.
Oh yeah, right.
Like, man, we thought that place was nice, and then it looked like crap in real life. I learned a lot, you know, in that experience. But it was definitely a joy working with you.
Facts. Yeah, it's definitely. I highly recommend working with a real estate agent, but especially Jason. Not only does he find you the right property, and make sure that you don't keep getting catfished by these houses that don't actually look like how the pictures are. That I highly recommend it. So today we're going to be talking about the real estate market, and really what are the financial benefits and what are the benefits in general of home ownership. We're going to be talking about, like I said, the market and the state of the real estate, state of real estate right now in this day and age, and what it's looking like in the future, and whether or not we're looking to actually get in, or should we get into purchasing or maybe selling a home right now. So if you're thinking about it, oh, Trey said, heck yeah, man, let's talk JV. I'm down. If you're down, okay.
Yes, sir.
Yeah, Trey over here want to talk joint ventures.
Mm-hmm.
That's awesome. Okay. Connections being made. Look, y'all, it's Financially Lit.
Yeah, I can't see all the comments on my side, but I'm gonna have to, you know, shoot him a message after this if you could.
Oh.
I didn't catch his name, but
oh yeah, Trey Higgins. Oh, you don't see when it pops up on the screen?
It popped up, but now it's gone. I can't see it.
Oh.
It's okay.
Okay. Gotcha. All right, y'all. So when when you take the time to like purchase a home, or you're really taking the time to say, hey, I'm gonna go ahead and invest in myself. I want to invest in my future. Um, taking making putting value into all the money that you're earning. So we're going to talk about research going into it, the commitment aspect, the responsibility of home ownership, and all that good stuff. So I'm gonna pass it on to Jason a little bit so he can spread some knowledge, just about the overall, you know, I guess the responsibilities of home ownership. Yeah.
So to your first point, you were talking about the benefits of home ownership.
Mm-hmm.
The first point we want to hammer home is that it's not beneficial if you don't approach it like an investment. Even if it's a place you're going to live in, you still want to make sure you buy in an area that you can at least project to appreciate some, over the next, over future years and things of that nature. The reason you want to do that is because that will turn the property into an actual asset. If the property isn't worth anything, on paper it's an asset, but it's really not, because it's not worth anything. If you treat it as parked money, let's say you come into a situation, you got to relocate, your company relocates you somewhere else. Well, you 5 years in, you've been paying your mortgage the whole time. So your payoff is gone, the payoff amount has gone down, but as your payoff amount has gone down, the value of the property has gone up because you purchased in a correct location. So now you can sell the house, and when you go relocate wherever you're going to relocate, and in that scenario, your company is also paying your relocation charges.
Mm-hmm.
So all the proceeds you get from selling the house, which was a wise investment 5 years previous, you got all this cash now. You know,
Right.
So you want to approach it like an investment, because it's what it really is parked money. You have income from your job, you have income from your business, your other investments and things of that nature. But you always want to know that if you ever had to, or if you wanted to sell, that you can,
Right.
and for a good amount, cash out on your equity. Now the responsibilities.
Oh wait, I want to hone in on that as well. If I could comment, Jason,
Oh yeah,
like
go ahead.
that built up value in the home ownership. Like I actually known a couple of people. They purchased the home and then they're upside down on that property when they go to sell, because their property is not it wasn't appreciating over time. They actually purchased that property in a bad area. And I say this to say this as well, and that's why you want to make sure that you're partnered up with an experienced and knowledgeable realtor, because they're gonna make sure that, hey, you're purchasing a property in an appreciating area, right? Just because that's a pretty house doesn't mean you wanna purchase that home, because if you're only looking to stay there for 10, 15 years, or 20 years, or whatever the case may be, and then it didn't even increase in value relative to inflation and everything, then it's like, oh shoot, my house is not worth much, or anything at all. I actually had to put more money into the house than there's actually coming out of it. So it becomes more of a liability than an asset. And that's going to be one of the big things we talk about on the live today, is turning that property from a liability to an asset.
And as a broker, I know a lot of realtors out there. They just encourage people to buy homes, buy.
Mm-hmm.
It pays us when we help you buy homes. I get it, but owning worthless property owning no property at all is better than owning worthless property. Because that upside down scenario that you just mentioned, I helped somebody sell a home not long ago where after closing they owed money. You know what I mean?
Man.
And that's not a situation you want to be in. Now,
right.
For that person, and I help a lot of people, so I ain't saying no names, but for that person, I was able to lift that burden. So if you're in that situation, and you kind of, needing to let loose, I can get you out, in the best situation you could possibly put yourself in. But next time, you just want to take into account, the neighborhood and direction that is going in. And I wouldn't tell everybody to buy a house. Everybody can't afford to. It's not the right time for everybody. And I think we're going to get into that too, what the market's doing right now. But I don't want to get too ahead of myself.
Oh no, yeah, you're good, you're good. But yeah, like we're gonna talk about like why I'm purchasing a home, because I hear pros and cons and things out there. And even in this day and age, people are fearful of it because of the seller's market. And but we're gonna definitely talk about that and really dig down in deep. For those of you tuned in, I want to know how many of you are homeowners. If you do own a home, let me know, or drop a like yes, or drop a little house emoji if you're streaming from your phone. And then those of you that don't own a home, like I kind of want to see, who owns a home, who doesn't, and what's your experiences with your home ownership as well. And then we're gonna get into. So go ahead, you can go ahead and take it away as far as the pros in home ownership, Jason.
So pros of home ownership, and we're assuming that you went about it the right way. You didn't run yourself thin, putting out too much in the beginning. You didn't make a bad investment into a bad neighborhood. Assuming that we didn't do those things, then the pros would be.
Okay, we got a homeowner.
Okay. Oh yeah, that he was saying that. Yeah. Okay. I'm gonna reach out to him for sure. But the first pro is that it's parked money, like I mentioned before.
Right.
You could get out at any time. I know you could speak to this as well. Home equity. You get cashing out of the equity, borrowing off of the equity, and making additional investments.
And as far as the equity is concerned, like they actually, after I believe a year of me being in my home, they took down my mortgage premium because they're like the value of my home increased so much. We're gonna decrease the amount of mortgage premium insurance that I had to pay, and that cut down my monthly payment by $300. Oh, wow. So of course I still make the same amount payment amount because just to pay down on my home, but it's nice to know that hey, my mortgage payment went from this amount and now it's down $300. So just because I bought in a great area.
Right. That's the key to it. The pros are pretty much endless when you go about it the right way. So you just mentioned another one right there. It being parked money, borrowing on the equity, it being rentable. If you ever decided, like let's say, I brought up the scenario of you relocating and selling, but if you want to relocate and you can still afford to hang on to it, and then you can hire a property manager to manage it for you while you rent it out. Now it becomes an income generator. Remember, we bought in a nice neighborhood. We bought in a desirable neighborhood, and it's gotten better since you bought it. You kept the condition of the property up by doing the maintenance items that you're supposed to do, and keeping reserves for repairs and things like that. You've done these things. Now it's an option for you to leave and rent it out. It's an option for you to leave and Airbnb it. The options that are going to be at your disposal if you go about it the right way is I could talk all night about the pros of it, and I see that you are experiencing those. And it's so good for me to hear that, coming from a past client. It means I did okay.
Yeah, it's great. And I mean, and even now, like, because I rent out one of the rooms in my home, because I was like, man, y'all, when I got into my home, I was like, oh my gosh, I have to fix this stuff. Like, I'm pest control. What do you mean? Like, I can't just call down to the maintenance office. Right. So that was a big change for me. But another thing, I was like, hey, how can I bring in some more money into my home? And I was like, wait, I have a whole bedroom here that's sitting empty. I rented out the bedroom, and literally, I just put an extra $400 on top of it, and it pays my mortgage, right? So like my home is decreasing the amount of money that I'm putting into it every month, and it's still growing in equity, honestly. So
Beautiful. That's how you do it. So if you go about it the right way, you know the pros are endless, and the only way you're gonna really have cons is if you don't do the right things up front. You know what I mean? Or you wear yourself thin, you know, getting into the house, paying too much for it when maybe you could have waited for the market to drop some. You know,
right.
cons come into play, you know, when you can't, you know, create equity. Cons, you know, come into place when you don't keep up the condition of the property, you know, maintenance items, roof, plumbing, electric, all these things, keeping an eye on all these things that makes your house functional, you know, during the time of your ownership. Um, the only way you're really going to experience cons is if you aren't handling those things. So, case in point, if we want to go into cons, is that okay?
Yeah, go ahead.
So we just focus on the condition of the property. All of the things that I just said would be pros, provided that you put in the right, that you've been employing the right strategies, you know, up front. If you do the right things, but if you do the wrong things as far as caring for the property, you know, you're not getting regular inspections on things. Like as the years go by, like let's say, I guess the best way for me to paint the picture would be to give you like a live scenario. So you bought a house, roof was 10 years old. You got the inspection during the buying process. They said it's got about 3 useful years left. Jot that down. Maybe we don't need to change that today, but we're gonna need to revisit that in a couple of years. You know what I mean?
Right.
You need to tally everything, keep that home inspection report, because you're gonna do a home inspection when you first buy your house. Keep that, make all the notes that you need to make, handle the things that need to be handled, you know, in the interim and immediately, and then the things that can be put off, if you need to, you know, save some money for some other things, you know, address those things then. But if you have a home inspection and it's telling you things that are going to need attention, the roof, you know, you're gonna need a little rewiring here that might not need to be done right now, but it will be soon. You know, if you're not doing those things, then you're gonna cause problems in the home that's gonna cost you loads of money. That if you keep the home, you're gonna eventually have to do, and you're gonna end up costing yourself money that you wouldn't have had to had you done, you know, what you need to do based on what the initial report.
Right.
The other thing is, if you go to sell, you're not going to be able to sell at the highest possible price, because when we run comps on homes and neighborhoods to say what you might be able to sell your house for, the assumption is that the house is functional.
Right.
So if the house isn't functional, you can have the nicest granite countertops, the prettiest stainless steel appliances.
Yeah, like the house that we were looking at, and it was this foundation. So it was a beautiful house. Oh my! I was ready to hop into that house where we were on inspection day, and then the inspector's like, the foundation was molding. I was like, what? The house was not like the back.
Literally
half of the house
stinking.
was literally on its last leg. And it was insane. I was like, oh my gosh. So yeah, so to add validity to your point, like it's wild.
Yeah, and to go back to that day specifically, I remember I showed up. You know, I got there first, and then he showed up shortly after me. And he took the first thing he looked at. You know, he went around and went under and whatever, and was like, I can, you know, to save your client money, to save your client money, I don't have to complete the rest of the inspection.
Oh yeah,
not right
yeah.
There. I won't even charge her for it, because that right there, you know, I don't think she should buy this house.
Yeah.
So,
He was really nice. He was like, I'm not even gonna take your money.
It was such a nice house, and it's a shame. And we saw it continue to be on the market after that, and they never dropped the price. And I'm sure the listing eventually expired. So these are the things that can go wrong, if you aren't, keeping the property in proper condition. So there's a con. If I could list another one before I pass it back to you, is that we're talking about equity. So you coming in, you don't have any equity, you're gonna end up upside down at some point. Or if you are in a position where you can financially work yourself through it over the course of years, at that point you just need to hope that something doesn't come up where you have to relocate. Because if you got to get rid of the property, it's going to be harder for you to sell it and keep the portion of money that you would want to keep, if any, if you're upside down. And also, if you wanted to rent it out, you would have to rent below market value, or whatever market value is. You wouldn't yield the return that you would want because of the equity situation that you put yourself in. I can go on and on with those two, but I want to hog the mic.
Oh no. Hey, no, you're good. You're dropping mad gems here. If y'all have any questions, like, you have Jason at your disposal. You can drop it in the comment section. You can reach out to him as well. I do also want to touch on wealthy individuals, right? And why they invest. Hey, Doe. Let's go, Wawa. And why they invest in real estate. But before I get into that, I want to, because you touched on the capital gains in a sense. So we had during the 2017 Tax Cuts and Jobs Act, so we have over $750,000 and mortgage interest that can be deducted on your taxes. The amount of tax breaks and deductions that you are able to take through home ownership, especially if you have rental income, if you're renting out the property or any parts of the property, if you're using the property for any business that you have, the write-offs that you can do that way. There are tax credits. There's the 1031 tax exchange. If you have a large capital gain, like y'all, and I just wanted to touch on that a little bit, but we're gonna talk about why it's important if you're looking to wealth up, why it's important to own property, real estate. Whether you're going in as an investor, a primary home ownership through VA loan, whatever the case may be, it is absolutely important on your wealth journey to tap into the real estate. And go ahead and touch on it for me, Jason.
Yeah, so for wealthy people, like you'll talk to wealthy people. I talk to a lot of wealthy people now since I've been doing this, and a lot of them own multiple properties. I mean, that's just one of the popular vehicles used to get to wealth. Property ownership, renting property out, all these things. You can create wealth by doing that, and a lot of people do it. That's just the reality of it. But the other thing is owning a property, renting it out, getting that consistent rental income from tenants. It could literally replace a job.
Right, that passive cash flow.
Yeah. Depending on how much rent you can charge, where you bought the home, and what the rental market is doing, and then how much do you owe on your mortgage? How much do you pay monthly? So obviously you're gonna have to pay your mortgage with the rent. How much of it do you get to keep? Do you own the property free and clear? You get to keep all the rent. Did you hire a property management company, which you have to give usually a percentage, to them for management of property? If after all the expenses, operating expenses, what you get to keep, you hear a lot of these wealthy people that make $50,000, $60,000 yearly off of one or two properties. It's people like the average annual income is like $40,000, $40-something thousand. So you do this property investment right, that property or those properties in combination, you're beating the national average in income. And you just waiting. If you have a property manager, If you have a property manager, you're just waiting for a check every month. You know,
Right.
when you're able to do it. And the other thing I'll say about that is this. I'll pass it back to you after I say this. You know, you don't have to physically work. So when I say it replaces a job, it's like you're getting the money, you know, in some cases the same, if not more, with the best of property investments that most people make at their jobs. Now you have a retirement plan, because if you're older and you just own properties and they're being managed for you, you're not able to physically do work anymore. You're still getting the income. You know
Right.
what I mean?
Yeah.
So if you don't have $1 million saved by the time you get out of the workforce, but you own properties that are bringing you income consistently, it's like you still have a job. You know, you're just not physically working anymore. You know what I mean?
It's definitely a huge way of building a stream of income. I have quite a bit of associates and even clients that are in the real estate that have that residual rental income. I mean, it's like every wealthy person that I've interacted with definitely owns real estate. I mean, the tax advantages are phenomenal in real estate. You can literally avoid millions in taxes, thousands in taxes, whatever bracket that you're in, and just investing into real estate and doing it the right way, like Jason said. Jason, I do want to make sure that we have some time so that you can share some more information about your business and how they can get in contact with you. For those of you that have real estate questions and things like that, make sure that you reach out to Jason. He is a wealth of knowledge. He also, I also make sure that I invite him back onto Financially Lit Tuesdays, so that he could drop some more gems with us as well. But make sure that you reach out to him, and he's gonna share with y'all how to do so. And yeah, any closing remarks?
Yeah, just some contact information. I am my phone number at the office is 904 503. I wish I could like put it on the screen here somewhere. Yeah,
That's the reason that you.
So that's my Facebook business page right there. 904 503 1072 is my office number. My cell number is 904 586 7086. And then my email address is jason.scott@remax.net. Try to keep it simple, you know. Like I said, just again, the clients we help, it centers around residential, you know, sales, and we help buyers. And then on the commercial end, we help tenants find space to run their businesses. I just put a tutor into her space where she's going to help kids. I'm going to be posting before and after pictures of how she's got it all decorated now. She's going to be tutoring kids in there. So we do that as well. And like I mentioned before, we're going to be adding property management. So you guys stay tuned for that. And we also are looking to bring in agents. I have some agents that I'm working with already, but we're always looking to partner with more agents. Anyone who's ever thought about working in real estate, or if you currently work in real estate, you know, licensed, and you want to explore new opportunities, new partnerships, definitely reach out. We're building a great thing here in Jacksonville. I'm excited about it, and we'd love to bring it in.
Absolutely. So y'all, whatever it is, when it comes to real estate, Jason is your guy. Like he said, on the property manager side, on the seller, buyer side, if you're looking for land or property, definitely make sure that you reach out to him. If you're looking to invest in property, just going in as an investor, definitely reach out to him as well. So in all aspects, Jason is your guy at RE/MAX Supreme. And it doesn't have to be just here in Jacksonville. It could be throughout the state of Florida. He can definitely assist you with that. And yes, we do have a question that just came in.
I do not, but I can refer you. RE/MAX has a great network. So I can get you someone down there that can help you out with that. And for myself, my business, we haven't added property management yet. You know, we just started out with the services I mentioned, you know, residential sales and, you know, buyers residential and then commercial tenants. So we'll be adding property management. We got to go through, you know, all the processes to get all of that set up. Not quite there yet, but I could definitely refer you to Remax Property Management service down there.
Cool. So you go. Thank you for everyone for tuning in to another episode of Financially Lit Tuesday. Be sure to tune in every Tuesday at 6:30 p.m. Eastern Standard Time for another episode of Financially Lit. We have a great one coming up next week as well. We'll be talking about vacation savings. We'll be talking about Wealth Up courses. We have a couple of more special guests coming to bless the stage, the live in a few weeks as well. So be sure to tune in. Thank you and have a wonderful, wonderful rest of your Tuesday.
Thanks for having me. And y'all go get y'all taxes done at Grand Rev Financial. Get your accounting stuff handled. Get your money looked at, your books handled, and all that at Grand Rev.
Yes, that part.